Greetings, everyone. This is Bob Kramer with giving you your March economic update. Well, March once again is coming in like a lion. We've had windy weather, very cold temperatures, and on this day of this broadcast, we've got some snow flying through the air. So this is kind of typical of Iowa weather, and I'm really looking forward to some warmer temperatures to get outside and have some fun. I hope you are going to do the same thing, and that March quote of "in like a lion and out like a lamb," I hope it's appropriate because I'm ready for spring. So today I want to talk a little bit about sector investing. A lot of people think about the stock market, and a lot of times they the stock market generally implies the S&P 500 or the Dow Jones Industrial Average. Some people think about the NASDAQ investment, which is primarily just technology stocks. But what has been driving the market over the last several years are these 8 huge stocks, including NVIDIA, Microsoft, Apple, Netflix, a few others. But those technology-oriented stocks, which comprise a lot of the NASDAQ-oriented stocks, have been driving the market. But just remember this, there are 11 sectors of the economy. Those 11 sectors include financials, communication services, technology, industrials, utilities, consumer cyclical, real estate, healthcare, consumer non-cyclical, energy, and basic materials. Any given time, one of those sectors could take the leadership position. And right now, the top 4, in our opinion, over the last, that really gained the leadership of the market include the financials, the communication services, technology, and industrials. Financials are really leading. That's your banks and insurance companies and other lending institutions that really derive a lot of their profits from interest rate disparity or what they're getting from the Fed compared to what they're getting from loans. So we're seeing kind of a shift, a little bit of a shift from technology over to some more value-oriented stocks. We see utilities are coming up a little bit, and even some real estate is finally improved with interest rates dropping down a little bit. What has happened in the market thus far? The S&P 500, which is the biggest index most people follow, it is actually down this year about 1.5%. Not a huge decline, but a decline nonetheless. And NASDAQ, which is those tech companies that I told you about earlier, that's down slightly as well. And it's really indicative of some nervousness on the part of investors and the fear, I think, as much as anything, of inflation. Inflation has been that harbinger of bad will that no president likes. Inflation has been tried to be curbed with interest rate hikes, and then just last fall we dropped interest rates a little bit. However, I think the economy overall is pretty healthy. We have low interest rates still in comparison to history. I don't know a lot of people realize this, but there were a lot of mortgage rates at the 8 to 10% not too long ago, and so we're seeing 7% interest rates on mortgages yet. Unemployment is still pretty low, right around 3.5%, and we're also having good things happening with international trade, in spite of the threat of having some taxes dealt out to 3 specific countries: China, Mexico, and Canada. Those are being threatened right now anyway. Tariffs never leave a good taste in anybody's mouth. I'm not in favor of tariffs, but I do understand what's going on because of the illegal immigration and certainly drugs that cross the border that are really decimating our population. So wanted to say, look at the long term. Overall, our economy is healthy. If you have any questions or would like to evaluate your portfolios, please give us a call. We'd be happy to visit with you about that. And I hope you have a great spring and get out there and enjoy the nice weather that is forthcoming. In like a lion, out like a lamb. Have a great spring. We'll talk to you next month. Bye-bye.